Welcome to the BIZCOMPS instructional course on using the BIZCOMPS database. My name is Kent Lance Schmidt. I'm the president of National Business Appraisers. I'm also a CVA, Certified Valuation Analyst, with NACVA, the National Association of Certified Valuators and Analysts. I'm a CBI, Certified Business Intermediary, with the International Business Brokers Association, and I'm a former CPA. Additionally, I'm a member of CAB, the California Association of Business Brokers, and I serve on their education committee. We have just recently revamped their 201 Advanced Recasting and Valuation course, and I also served as a board member for CAB for the 2015 to 2016 term as their treasurer on their board. All right, let's begin. Today we're going to cover a brief overview of the BIZCOMPS database, what it includes, what it excludes, a differentiation between Main Street and lower middle market transactions, cash versus finance transactions, and primary and secondary areas of comparison within the database, as well as comparison of transactions. Additionally, we'll compare some of the trends over decades of the statistics and data within the database. We'll analyze the terms of sale of the transactions. We'll discuss briefly an explanation of the statistics. We'll define what SDE or seller's discretionary earnings is. We'll also talk about adding inventory to your final value, as BIZCOMPS does not include inventory in its multiples. So it has to be added to the final value of your client in order for your client's value to be accurate. And we're going to discuss selected illustrations, inputs and outputs, and sanity checks for the database. The BIZCOMPS study started in 1990 by Jack Sanders. I met him when he actually first started this study. BIZCOMPS the software was developed in 1995. It was licensed for online delivery in 1997 and is available through NACVA, again the National Association of Certified Valuators and Analysts, and SEER, in 1998. Business Valuation Resources has provided it since 2000, and in 2004 Jack created the BIZCOMPS user guide. Current software updates went online in 2006, and that's when online contribution was started, and online reward system began in 2013. BIZCOMPS began its online presentation in 2013, and in 2014 Jack added 2 more partners to market and source and sell the database. It's tough to make predictions, especially about the future. Good old Yogi Berra. And that's true. Basically, they need to issue us a crystal ball when we're going to value a business, because we're actually predicting the future. In valuing a business, you need to determine first what is known as the future anticipated benefit stream, or in other words, your profitability of the business in the future, what it's going to make in next year, the year after, 2 years after, and so on and so forth. So it's the future that we're valuing. A buyer is concerned about the past, but only as its predictability of the future. So we're using past data to try and predict the future earnings of the business. And then to that, we determine a multiple to apply to it in order to come up with a value. So that's the way the process works. We use past data to predict the future, and then with a multiple from BIZCOMPS or some other source, we apply it in order to determine what the value of that business is, along with possible other additions that we make. Business sale data is not publicly reported. It's not public information. Small business sale data, unlike real estate, is not readily available. There is no requirement for it to be publicly reported. It must be collected and reported privately. The only individuals who are repeatedly involved in the transactions are business intermediaries or business brokers. They're the ones with that data. This mystified me when I first started in the business 30 years ago, when I walked in to my father's firm and asked about statistical data, and he laughed at me because there really wasn't any back then. Although there was, it was just new. Within a year or two, Jack Sanders started this database and came into our firm, and I did all I could to help him collect data. But it's just something that it's not required by the federal government to record, and therefore a lot of the data is private, and it has to be collected privately, again from business intermediaries and business brokers. The BIZCOMPS database is actually the second transactional small business database, and it was developed by Jack Sanders in 1990. IBA, or the Institute of Business Appraisers, had their database, which was first, but there were some issues with that database. And that's the reason Jack created the BIZCOMPS database. The BIZCOMPS database was developed to address the weaknesses of the IBA database, now known as Value Source Market Comps. It contains 21 fields of data. The BIZCOMPS database contains 21 fields of information and is based on criteria that business brokers felt most important. Most of the information is contributed by business brokers with a certification, and the database today has over 25,000 transactions. Collecting this data is a laborious process. It takes a lot of work, and I've seen what goes into developing this kind of a database. Again, with respects to the BIZCOMPS database, it currently has over 25,000 transactions, 21 comparable data fields, median revenue of $167,000, and an average selling price of $345,000, and it's available online both for single search or to buy the entire database. The contributors, as mentioned a moment ago for BIZCOMPS, it comes from those who are intimately involved in business sales. The data is collected from business brokers and business intermediaries, and these are individuals who provide the most reliable information. Again, still, Jack has to vet this data, but the information comes from these individuals who know exactly what happened with that given transaction, which is why it's critical that they have that involvement. While each of the sold business databases present as much data as possible for their individual application, there are basically two types and two types only of transactions or sale transactions that take place. And those transactions can be classified either as an asset sale or a stock sale transaction. One of the main differences between an asset sale and a stock sale is that most of the Main Street business sales are asset sales, and most of those transfers occur debt-free. In other words, the buyer does not assume the debt of the seller. They only buy up the assets of the business. However, with lower middle market transactions, it can transfer either debt-free or with debt in place on some stock sales. So with BIZCOMPS, businesses sold debt-free, or they're in the debt-free zone. That happens with some stock sale transactions as well. But all of the business transferred in BIZCOMPS are asset sale transactions sold debt-free, and inventory has also been removed, which we'll talk about later. Another element to consider in business transactions is the nature of the transaction or the terms of the transaction. For example, cash sale transactions. Cash transactions are compared to term sales, and term sales involve a down payment with the balance of the purchase price paid over time. In a recent study, 36% of the transactions were actually cash transactions. That means the balance had some version of terms. When we talk about terms, we're talking about a payment structure with a balance paid with interest over a period of time, over years. Sometimes those that can occur with the seller. That's what we're talking about here. Basically, transactions that include seller financing. Other times, it can be done with SBA financing. In those cases, it's still cash to the buyer or to the seller. So that would fall under a cash transaction if it's an SBA type transaction. Nevertheless, even with SBA transactions, they quite often require the seller to carry some small amount over time. Another important marker in the sale of a business or a business transaction is its size, bigger versus smaller. For Main Street transactions, most of the transactions are under $200,000, and the owner remuneration or their salary or benefits is a big part of that earnings. Therefore, basically at that level, people are basically buying themselves a job, which is what I used to tell people when they ask what I do. I told them I help people buy themselves a job. However, when the transaction, when a business revenues or profitability gets above $500,000, then the size effect comes into play. And there's more management involved, the business is less dependent on the owner, therefore it's less risky, and because it's less risky, then it receives a higher multiple. So usually the smaller transactions where it's this owner-operator, sole proprietor, earning most of the money as his salary, that is really a very Main Street transaction associated with a lower multiple. Higher multiples come into play the larger the business gets in terms of both its profitability, and the larger it gets in terms of its management and other employees. Therefore, it's less risky, and therefore you could receive a higher multiple on those businesses. Age is what makes furniture worth more and people worth less. Author unknown. Yes, so antiques can have a great value. However, business assets, the physical assets, depreciate over time, and their asset value drops over a period of time. Nevertheless, the value of the business can increase over time if the business has longevity and it's maintained its profitability. Nevertheless, if a business doesn't have a lot of profitability, but it's been around for 5 decades, that really doesn't have much value, even though the company's been around for some time. So there's a mixture of information in this quote here. Again, assets, physical assets depreciate and drop in value. A business tends to increase in value over time, assuming it maintains a good level of profitability. So what is actually sold in a BIZCOMPS transaction? BIZCOMPS transactions only contain asset sales. So that's important to know first thing. There are no stock sales, again, in the BIZCOMPS database, only asset sales. And in those asset sales, the things that transfer are the furniture, fixtures, and equipment. Fixtures transfer in terms of usability, but not in terms of ownership. The company doesn't actually own the fixtures after they're sold. They only own the use of the fixtures. But the furniture and equipment do transfer, as does goodwill, and if there are any intangible assets included in the transaction. Inventory is shown in the database, but it's always indicated separately, and that's important. We'll get to that in a minute. Licenses to do businesses are also included, as well as some other intangibles. One thing I was always curious about is comparing a database and looking at it over time and seeing how the ratios or multiples may change over time. This representation given by Jack Sanders shows the difference in the last 10 years and the prior 10 years for different multiples. So when you look at the sales to gross sales price to gross sales or gross revenues, you see that in the last 10 years, the mean was 0.53 and the median was 0.44. However, 10 years ago, the mean was 0.46. That's a 7-point difference. And the median was 0.38. That's a 6% difference. So that's a big change over a 10-year period. However, what's interesting is when you look at the sale to SDE multiples, they're identical. The mean sale to SDE multiple in the last 10 years is 2.0, and the median is 1.8. 10 years ago, the mean was 2.0, and the median was 1.8. So this is just an indication of one of the reasons why seller's discretionary earnings is the better method in determining the value of the business, is to use the SDE multiple. Sales can vary considerably, and if you don't have a certain profitability to sales price, it can be too high or too low from the company. It's just not as reliable. So I always use seller's discretionary earnings. I may show the sales price to gross sales revenue multiple, but use that, but I do it with caution. Generally speaking, the more reliable method is to use the profit multiplier of seller's discretionary earnings, sales price to seller's discretionary earnings, and you can see why here. This is just a graphical representation of that data that we just saw in the previous slide. And you can see in the blue are the SDE multiples. So the mean over the 10-year periods was 2.0, and the median was 1.8. Those are multiples versus a percentage of sales. The percentage of sales for sales price to revenues is shown below in green, and you can see how it declined or actually increased from 0.44 to 0.53 for the mean, and 0.38 to 0.46 for the median. Excuse me. You see the drop here per year, the 0.53 to 0.46 and 0.44 to 0.38 when you compare it to the previous decade. So we can see that the age of the data is important. As we just saw, time does seem to affect the gross sales price to gross revenue multiple, but not the earnings multiple. Therefore, you can see that possibly the older data does seem to lack some credibility. In analyzing your selected transactions in a sample, it's important to be able to compare transaction to transaction, as well as your transactions in that database or in that sample to your selected company. So the BIZCOMPS database transaction data does provide opportunity to compare and discriminate between the transactions using those fields of data we mentioned. There are 5 primary and 5 secondary areas of comparison. The 5 primary areas are by SIC code, or Standard Industrial Code, or NAICE code, the North American Industry Classification System, or by business description, or by revenue, by profitability, or by percent of rent paid. Those are the 5 primary areas that you can compare transaction to transaction, or the transactions, any of the given transactions to your company, your subject company you're valuing. The 5 secondary areas of comparison are by down payment and terms, size of inventory, days on market, number of employees, and by location. Additionally, there are 2 more areas of comparison. One is by the estimate of the value of the furniture, fixtures, and equipment. The other is by franchise information if it's appropriate, applicable, and available. Next, we're going to look at these individual areas of comparison one by one. The reason that that's important is visual inspection of these different categories can give some good insight into the transaction and the relationship both to each other, the overall sample, and to the company that you're analyzing or valuing. Okay, let's discuss the area of terms of sale in the transactional database and what that implies and what that encompasses. The circumstances are important in any sale. You have to know what's being sold and at what price. And again, we mentioned that 36% of the sales were all cash, or nearly all cash. That can indicate sign of a distressed business, or that the seller has no confidence in financing the particular buyer. He may not think the buyer's is too young, or doesn't have enough experience, or just is extremely risk adverse and just doesn't want to take any chances. He's retiring, he wants his money, and he wants out. So it can indicate a distressed sale of a business, but sometimes it's just a seller's preference that they don't want to take any risk once they sell the business, and or again, they don't necessarily trust the confidence in the buyer. So that doesn't always indicate that there's a sign of a distress in the business. But again, that's why it's important to see if you can look at the terms that are available of the sale for any of the business in BIZCOMPS if you want to compare transaction to transaction or to the subject company. We're going to get to some of those other indicators that we mentioned, some of the other areas of comparison in a minute. But first, let's talk a little bit about statistics. Statistics are like a bikini. What they reveal is suggestive, but what they conceal is vital. Author unknown. In looking at data, you have to look behind the data to understand what is there, what it involves. Sometimes what looks at something on the surface may not really be what it's implying if you look deeper into any given piece of data that you're looking for. That's why it's important to look at the data and look at some of the different areas of each of the statistical data points or comps, especially if you think something's out of line. And again, these statistics are important because what the statistics are going to help show us is the ability to have confidence in your sample and its output, so that you know that you can have some reliability in the data that you extracted and in the ultimate value you give to the company based on this data. All right, basic statistics. Do not fall asleep. This is where you stay awake. We will be brief in what we discuss here, but it's important to have a basic understanding of the basic statistics in order to understand what they mean and what they indicate about the sample and the central tendency of the data that's being analyzed. So this chapter is very basic discussion of statistics. A more sophisticated discussion or method is the linear regression method and multilinear regression, where central tendency is analyzed in more depth. A quick and dirty formula to calculate standard deviation is on page 12 of the user's guide. However, a brief explanation follows. So a shortcut method of calculating variance and standard deviation requires 2 quantities. One, the sum of the values, and the sum of the square of the measures. So not to get too statistical on you here, I'll let you read the rest of this. It's a formula. There's a lot more that you can look up if you want to go into this. Statistics can be a lot of fun, but I realize for a lot of people this is where you fall asleep. So I'll let you read the rest of this slide on your own here. As mentioned previously, the asset sales are the only sales that are reported in the BIZCOMPS database. However, there might be a case where you want to convert asset sale transactions to a stock sale transaction. So again, all transactions reported in the BIZCOMPS database are asset sale transactions. They all include furniture, fixtures, equipment, and goodwill, and some other possible intangible assets. The values are derived by BIZCOMPS transactions, can be converted to a stock or equity value. And we're going to show you how you do that. The process is actually pretty simple. First, you add all long-term and short-term assets other than the furniture, fixtures, and equipment, because that's already incumbent in the value. And you add inventory because inventory is not included in that value. So you're going to add inventory, accounts receivable, accounts payable, all long-term assets, and then the second step is you deduct the liabilities, including accounts payable and other liabilities. The result then is a stock or equity value. So it's a pretty simple process. Now let's discuss seller's discretionary earnings. BIZCOMPS uses seller's discretionary earnings as its profit level, or SDE as it's abbreviated. And seller's discretionary earnings is basically EBITDA, which is earnings before interest, taxes, depreciation, and amortization, plus the salary of one working owner and their perks, any other one-time expenses that will provide for you seller's discretionary earnings, which is the profit level that BIZCOMPS uses. The other method they use is the revenue source. So revenue is one multiple. The other multiple is derived by SDE. Appraisers will generally add a normalized owner's compensation to arrive at true enterprise earnings. So one more time, seller's discretionary earnings is equal to net income before tax, or NIBT, plus amortization, plus depreciation, plus interest, plus the owner's compensation, owner's benefits, non-business expenses, and one-time expenses. And this is important because if you don't get the SDE correct, your value will be incorrect. So you have to make sure SDE is calculated properly in order to get the proper value when you multiply the SDE to sales price multiple times your company's SDE. While BIZCOMPS does exclude inventory from its asking price and sales prices, the amount of inventory is always shown. The important reason for its exclusion is that if the inventory were included in a small business transaction, it would distort the sale price and lead to erratic ratios. That's why the most pure way to value the business with market data is through BIZCOMPS, because you don't have a distortion of inventory. You can value the business purely without inventory first on an asset sale basis, and then add inventory of your subject company to get a more pure value without any distortion. That was one of the primary reasons that Jack created BIZCOMPS, is to eliminate that distortion of having inventory included in the database. It's the only database that excludes inventory, is BIZCOMPS. So it's why it's the best database for valuing Main Street businesses, bar none. An excellent example of this issue with inventory and how it can be dealt with can be found in the user's guide. The analyst can always customize their client value by including the client's inventory in the value. And that value can be quite different. If you have a company that's a retail company, you might have a lot of inventory. If it's a service company, you might not have any. Nevertheless, the pure way to do it without distortion is to then calculate the value from the BIZCOMPS multiple, and whether it's SDE or revenue, and then add your inventory for your client to get the true or more complete or more accurate value of the business. Of all the 21 areas of comparison, or 12 that is, furniture, fixtures, and equipment value is the least verifiable field of information in BIZCOMPS because they're rarely sold separately, so we don't always know exactly what they are. They're quite often estimated by the buyer and seller. Sometimes they'll increase the value for tax purposes if they want a faster write-off. So that's the least reliable and the least comparable field of data to use if you're trying to compare transaction to transaction. The ideal level of value for the furniture, fixtures, and equipment is fair market value in place. And again, remember that the company isn't actually selling the fixtures. They can only sell the furniture and equipment. The fixtures are an appurtenance and they remain with the business. However, the buyer does get the usability of those fixtures. So the FF&E value is still useful in comparing transactions and helpful to support the value that's developed, but it's the least accurate of all the areas of comparison in the database. Percentage of rent paid. This is an important category and area of comparison. In fact, it's probably the most important ratio in terms of determining the viability of a business. If the rents are too high, you simply are putting more money in the hands of the landlord, and you're basically working for the landlord. So except for unusual businesses, 10% rent is the highest that should be paid. However, in California, it might creep up to 11 or 12, but you get too high in your rent in any business and you're just working for the landlord. It's very critical, and quite often if the rent is too high, it will force a lower value of the business. In some cases, it makes them even unsellable. So this is a very important area to compare if you're looking at transaction to transaction or comparing to your own subject business. Another great area of comparison is the days on market. This indicator can help also the analyst in determining the desirability of any given business. If you're looking at the business that you've selected in the sample, you can look and see how long it took each one of them to sell. The average selling time in the database is 218 days with a median of 174 days. So if a business sells in 90 to 100 days, it would tend to indicate it's a pretty desirable business, or maybe it's just priced really well. However, if a business takes over 1,000 days to sell, that tells you that's a difficult business. Maybe it's a difficult category, or it may have been overpriced and it took the seller a while to reduce the price to where it would sell. Sometimes categories such as construction companies or anything that requires a license take a lot longer to sell because you have to find somebody with a license and that has the money and that's willing to run the business and that can run the business to buy those contractor-related businesses. They're probably one of the toughest categories to sell, and they take longer than the typical business. So looking at the length of time it took any one of the given market comps to sell is good to understand and to look at the average there as well. But it can be helpful in comparing and looking at your own company and to see what the company that you're working with and how long you think it might take to sell that company as well, which the seller would be interested in knowing that. We mentioned one of the additional areas of comparison is franchises. BIZCOMPS does have franchise information where it's available, including the royalty amounts. However, very little premium is added for franchises, except maybe McDonald's. There might be a few that have better premiums for. The franchise cost, paying the franchise fees, is just another cost of doing business, and it reduces your profitability. Therefore, it brings it kind of into parity with other non-franchise businesses. Some people love franchise businesses, especially first-time buyers, but a lot of people just don't want anything to do with it. I had a couple of companies that actually disenfranchised the business before they took it over. There are 625 transactions that were franchised in the database, which is up from 482 franchises. The number of employees is another area of comparison. It's a great way to compare transaction to transactions, and there are both advantages and disadvantages to the number of employees that a company has. Somebody who doesn't want to deal with a lot of management issues might like a company with fewer employees. It's easy to run, they can get their hands around it easier, and that can be very beneficial, and some people prefer that. However, a company that has a lot of employees, you have a lot more technical issues and some problems that can occur with it. But if you have a lot more employees, then that would tend to mean that the company is larger in size. And as we discussed earlier, that size effect comes into play, so it may actually be more valuable. So there are preferences between buyers, as well as there are differences in value based on the number of employees and even the nature of the employee base and how well it is functioning within that business. But it's again another good area to look at if you can compare transaction to transaction or to look at in comparing to your subject company. Next, we're going to look at a selected view of the database so you can see some of the categories that we've been talking about. This is a selected records view of an extract for heating and air conditioning contractors, as it says right here. And you note across the top here, it starts with the business type, heating and air conditioning, asking price, annual revenues, seller's discretionary earnings, sales date, sale price, percentage down, terms, sale price to revenue, sale price to SDE to revenue, sales price to SDE, and over here your inventory, furniture, fixtures, and equipment, rent, location, etc. So this is a great view. It can tell you in one picture quite a bit about the companies, and you can look at some of these areas for comparison that we mentioned earlier. With the BIZCOMPS database, you can select and export a good number of sample reports or reports that you can use. This is a sample report that shows a regression line here and the data points of the individual companies within a given sample on through this scatter plot. This is a representation of sales price to annual revenues, with the sales price listed here and the annual revenues on the bottom. So if you look at these different points, you can see as the revenues go up, where the sale price goes up, and that quite often tends to be the case because, again, the size issue or size effect. This is another sample report. This one's the sale price to SDE, the sales price here as it goes up, and the SDE on the bottom axis here, showing the, again, you can see the size effect, that the price goes up, or the value goes up quite often as the size increases here. But you can see whether or not the data is closely grouped. It's possible that if I was doing this, I would exclude these points from the company that I was looking at, assuming the company whose value was in here. So this is a great way also to look at the data yourself before you're completely finished trimming it, to get rid of outlying pieces of data that might lie in your sample. These are the two graphical presentations I usually give to the clients, at least the one for seller's discretionary earnings, because when the seller or owner or buyer sees it, they can understand graphically immediately with this picture what's going on. So, you know, to say a picture's worth 1,000 words. When it comes to buyers and sellers, they have different aspects. Of course, the seller is looking to get the maximum price he can out of the transaction, and will try and do all he can to help push that multiple or push a broker possibly to sell it at a higher price than is possible. Many times, one of the reasons we noted that the transaction sits on a company business sits on the market for a long time is the seller is unrealistic in price. One of the greatest things you can do for a seller is to help them by valuing the business with BIZCOMPS and or other databases and other methods, to help them be realistic in their pricing of the business so that the business doesn't sit and stagnate on the market. Conversely, the buyer wants the lowest price he can, or at a minimum to validate the seller's price to see whether or not that price is reasonable for their expectations. So they have different biases, but ultimately the true value, or well, the best opinion of value that you can render would help buyer or seller. And I've done a lot of both. So it's just important to keep that there is a bias in mind for what they're looking at. All right, we've covered most of the technical abilities or technicalities of the BIZCOMPS transactional database. So now let's take a look at what it looks like in its use in the real world. So now let's talk about the use of the data. I guess this is what you call cloud-based computing. In some cases, there simply isn't enough data to be used to get a good value for a business. Sometimes you only have one or two comps. Therefore, you might be able to use those indication of value from those comps to do a sanity check. But to use the comps properly, you have to have certain elements. First, you have to have a sufficient number of comparable transactions, and then the grouping of the data in the sample has to be close enough to each other. So generally speaking, you need 5 to 30 comparable transactions, and I would say 6. The valuation world likes to see at least 6, and there's a big debate whether it has to be 6 or 30. But if you have at least 5, but I'd say 6 transactions that are comparable, then you can start with having a sample that would be possibly relevant for valuing the business in a proper fashion. The next thing you have to do is determine whether or not that data is close enough to each other to determine what we call the measure of central tendency. So the way we can do that is looking at that scatter graph we saw just a minute ago with the linear regression line. And the BIZCOMPS database does that for you. You just have to click on the tab at the bottom and you'll see it. So, and then of course you can eliminate outliers and non-relevant data and make it tighter and bring that regression line in. And you want to look at things such as the coefficient of variation. That's very important. The coefficient of variation is a statistical measure of the database or the data in the sample, and it tells you how close it is to how close they are to each other and how good that grouping is. So usually a coefficient of variation of 0.30 is good. Anything below that's awesome. If it's a little above it, it still might be usable. Just depends. So we can also look at other relevant databases and see how they compare to the output of BIZCOMPS. But again, the things to make sure that it's useful beyond just a sanity check is the number of transactions that you have in your sample and the closeness of the data as represented both in the scatter graph and a regression analysis or by the coefficient of variation after eliminating outliers and non-relevant data. All right, so let's look at how we possibly can compare the databases. Ooh, don't mix databases. Well, that's not really accurate. There is a way to do it. You just have to be very careful in what you do. But you can use data from the different databases and compare them, and it can be very powerful if you do it right. Okay, so the good news, as I mentioned, is if you're careful, you can use the different databases in conjunction with each other. You can mix the gross sales from each of the databases, which is good because there's less issues to determine. Gross sales are just gross sales. You don't have to make the computation as you do with SDE and seller's discretionary earnings. However, a caveat is that to use the ratios, you have to be sure of exactly what's sold. You have to make sure that you've eliminated things that aren't applicable in one area that are to another to make sure that the data from the different databases is comparable. First thing you need to do is to add inventory to the BIZCOMPS value in order for it to equal the value source market comps, formerly known as IBA, and the deal stats data so that you have your SDE value or your value is comparable from database to database. Additionally, you may need to add non-compete agreement values, consulting agreement values, etc. to the value source market comps and deal stats. BIZCOMPS includes those values, as we mentioned earlier a few times. So you may need to make them comparable, you may need to add those items to those comparables that you extract from value source market comps or deal stats in order to make them comparable to BIZCOMPS. If you choose to use the value source market comps database, you have to be careful of a couple of things. Number one, if there's a transaction that's a stock sale, eliminate it. There's no way of knowing what's in it, so just get it out of your sample. Just get rid of it. Number two, if any transaction had real estate involved, eliminate it too, because there's no way of differentiating how much of the value was to real estate. So if you're going to use the market comps database, the value source market comps database, make sure you eliminate any stock sales and anything with real estate from your sample. That's the first order of business. Now, when it comes to SDE, it's a little bit more complex. It's a little bit more complicated. With respect to SDE, DealStats doesn't have as many SDE entries. However, you can convert an EBIT or EBITDA transaction to an SDE calculation by adding depreciation and amortization if you're using EBIT, or by taking the EBITDA calculation and adding in the compensation to the owner, including non-cash charges, and add those expenses to the deal stats data in order to properly calculate SDE for it to be equivalent to the BIZCOMPS calculation of SDE. With BIZCOMPS, there's no adjustments necessary for those entries. And deal stats does have some entries that are SDE. They just don't have as many of them. Additionally, with deal stats, you can convert those stock values to an asset sale value. Again, with value source market comps, you have to eliminate those because you can't make the calculation we're about to show you. But for deal stats, you can. You can take a stock value and you can revise it and turn it into an asset sale value so it can be compared to a BIZCOMP value, which are only asset values. So here's our calculation. So to convert a deal stats stock sale to an asset sale so it can be compared to asset sales in the BIZCOMPS database, you follow the following protocol. First, you take the sales price, known in deal stats as the market value of invested capital. Take that sale price and then you add non-interest-bearing debt to it because that initial calculation is netted out. So you have to add back the debt to that initial sales price to get the total value. Then you reduce that value by deducting any cash, any accounts receivable, and any other assets other than equipment. And what's left is an asset sale value equivalent that can be then compared to BIZCOMPS asset value, which includes only furniture, fixtures, equipment, inventory, and goodwill. So that's the method of converting a deal stats stock sale transaction to an asset sale transaction. So you can compare asset sale transaction to asset sale transaction between the databases of deal stats and BIZCOMPS. Okay, as we wrap up here, I just want to give you some additional information. We've only gone over a brief number of issues with the database. There's a lot more that you can learn about it, and to do so, I would refer you to the 2020 BIZCOMPS User's Guide. And there are a couple of reference books that are great. Compare Apples to Apples, Investigating the Difference in Transactional Databases by Fred Hall, and the Comprehensive Business Guide to Use and Application of Transactional Databases by Heidi Walker. And that's a great resource. I've used that one. I have that one. I've used that one myself. So these and other sources will help you understand the databases overall, and especially the User's Guide will help you a lot with BIZCOMPS, as well as these other two sources. So in closing, the three databases can be used together, but only with extreme caution. You can use and take the different multiples or the different comparable sold companies, modify them, and then create your own Excel spreadsheet and drop them in them to create an overall value. However, the best practice is actually to determine the value separately with each of the databases, following the rules for those databases, and then just compare the results. And that's what I do. If you have only a few data points and you want to try and combine them, that's fine. It's just a lot more difficult, and you can really screw up if you're not careful. So the best way is just to calculate the value of the subject business based on each of the different methodologies from each of the different databases, and then compare your results. So in finally determining your client's business value, first thing you have to do is determine how your client's business varies from the market data. Because if it's not comparable, then it's not apples to apples, and it just doesn't matter. You have to make sure that the data in the market data you have, is going to be comparable overall to your company's, the business you're valuing, the subject or client's business. Next, you adjust ratios to reflect those differences. You convert asset transactions to your client's equity value, and then you determine the proper weight for the market approach. Sometimes I use two different databases, so I will weight each of the two different databases and say which one I apply the most weight to. Or sometimes I use an income approach as well, and I'll weight three of them. So you have to determine the proper weighting for the market data approach if you use more than one data or more than one market comps database. So just keep that in mind, that the weighting is important when you get to the end, and it should be done whether you're using an income approach, market approach, or whatever. That's just standard protocol in valuing a business. So in summary, BIZCOMPS has over 25,000 transactions, and it's much more valid than the rules of thumb or industry standards. The transaction contain only furniture, fixtures, equipment, and goodwill or other intangible assets. Inventory is not included in the multiples or the comparable companies, but it is indicated so that you can get an idea of what those companies made. There's many ways to discriminate between the transactions. You saw the different 12 categories that we talked about. And then you can use scatter graphs that have linear regression lines to see how closely the data is grouped in your sample. Also remember that all the transactions in the BIZCOMPS database are asset sales only. However, you can convert the asset sale to a stock sale if you want, or you can convert a stock sale to an asset sale, as we showed you. And the stock sale represents more the equity value. Sometimes you don't have enough comparable data, but you can still use it for a sanity check. Or if you're just trying to help someone out with a value and they're not giving a complete valuation, but you're showing a seller something, you can use it as a sanity check, even if it has more comparable data or more comparable comps within that sample. You just have to be careful how the market approach is used. Databases are updated 3 or 4 times a year, and there's both electronic and hard copies available. The hard copies, I think, have been discontinued now for BIZCOMPS, but it's all electronic based. But it's easy to pull up the data that you need from the electronic source once you're a member. And again, remember, you can contribute comps if you're a business broker or business intermediary and get this data for free if you contribute enough comps per year. Otherwise, you can purchase it on a one-time use or for the database, but the price is very reasonable for what you get in this database. Finally, if you have any questions, feel free to go to the BIZCOMPS website, shown here, www.bizcomps.com. Or you can email me at Lance at National Business Appraisers for more information, or call me on my phone. My phone line is 949-598-0986. And I've enjoyed presenting this. I hope it helps you. I love helping people and helping brokers. If you have questions about this database or others, or in valuing business in general, I'd love to help you. Again, it's what I do. I value businesses as well as sell them, and I've been doing it for 30 years. So I look forward to your questions or helping you. Good luck and best wishes in your journey in valuing the businesses, and I hope this has been helpful. Thanks, and have a good day.